Okay, in this next slide, we're going to talk about having a cash offer versus getting an offer that has a mortgage or a loan. You know, obviously, cash is still king when it comes to buying a house. A lot of sellers, you eliminate a lot of potential issues when there's not a lender involved and it's pure cash. Assuming that you've got the cash, you can prove that you have the cash on hand in the bank or you have access to the cash. Obviously, a seller is going to want proof of that if you're going to do a cash offer. Cash also, you can close faster. Usually, a title company just takes a couple weeks to maybe get title work together if you're in an HOA to get the HOA documents and so forth. So cash is ideal. However, like most people, if you're like me, you would need to get a loan. And then there's all kinds of different loans out there. In the crazy multiple offer market, you have three really main types of loans. You have a conventional loan, which usually can be as little as 3% down, but usually to avoid mortgage insurance are going to be 20% down. Of course, on any loan, less than 20% is always going to have mortgage insurance. You have a FHA loan, which you can get away with as little as 3.5% down. You're going to find that FHA, it's a government-backed loan, is going to be a little bit more strict on approvals and appraisals and so forth like that, as well as the VA loan, which is a great loan for the veterans. And unfortunately, in this market, it's a tough loan to get approved by a seller because the appraisal process is much more stringent. They are trying to protect the veterans. It's a great loan for veterans, and I just wish that sellers would consider them more often. So those are the three loan types, and of course, you've got to look at as a seller, they're going to look at how much down payment are you putting down. Now, to me, I don't think it should really matter that much as long as they've been approved. But in this market, the sellers are wanting to see, the more down payment, the better. I guess they're looking at it from a point of the chances of loan approval are higher with a person that has more down payment. So the other thing you're going to want to make sure you're with is a reputable lender. They want a lender that can close on time, has open communications with all the parties involved in the transaction, um, you know, and can just do what they say they're going to do. There's a lot of lenders out there, what we call fly by night lenders, that, they end up not doing a whole lot of loans. They end up screwing things up. They don't have a good stable of appraisers available. They can get the home appraised correctly and so forth. So you want to make sure you're working with a good lender. And then lender communications is good. There's different stages within the loan process that goes from, getting what they call originating, going into underwriting, and doing all the appraisal. And there's just different stages within that loan process. You want to make sure the lender is communicating those stages to all parties involved. Nothing makes a seller feel more comfortable than getting a report from the lender that says, "Hey, we've gone past this hurdle. Everything's looking great." It just gives the lender or the seller confidence that you're going to be able to get to the finish line with this loan. And then lastly, which is a big deal right now because of the multiple offer people overbidding, is appraisals. You want to make sure you're with a lender that's got a good set of appraisers available that can do the appraisal. Now, it's appraisers are interesting because you have to go through a third party middleman, the lenders do, to order an appraisal. They can't pick a specific lender. They have to put the order in for an appraisal, and then the center middle person then selects an appraiser based on probably availability, how much the lender's willing to do the appraisal for, and so forth, and how fast they can get it done. But you just want to make sure that the appraiser has a track record of doing very detailed appraisals and being very accurate with their assessments. They understand the area that the house is in. You don't want to get an appraiser that is based out of Austin to do a Dallas-based appraisal. He doesn't know the neighborhood. So that's another important thing that you want to talk about. So the next part of a multiple offer. So that's cashes versus loan and all the things about a loan. The next thing I want to talk about is the title policy, earnest money, and all that. So let's go to the next slide.